Joining us now to talk about the markets, Jim, as we approach the opening bells, Anthony Woodside. He's a senior trader and portfolio manager, Neuberger Berman. It's good to see you this morning. What are you going to be watching most of all this week?
Great to be here, Scott. In terms of what we will be watching this week, of course, you have the Fed minutes on Wednesday. I think that that's going to be very instructive to outline the evolution of monetary policy going forward. Particularly, we want to see if they provide any light on their inflation framework and how they expect policy to evolve going forward.
Yeah. Where's the opportunity in the market now, either stocks or credit?
We think that when we look at the market here, the opportunities are pervasive in corporate credit still. I know that we had a strong rally in credit. However, we look at the global macroeconomic landscape and we see an environment where policy yields are at zero across the globe, not just in the U.S., but in developed markets in general. And we think that that creates a very constructive environment for corporate credit. Fiscal policy remains supportive. I know that we have an impasse in Congress currently, but we do expect the constructive environment to continue to be supportive for credit, given the pervasiveness of yield scarcity for investors across the globe. Yeah,
speaking of, where do you see yields going? I mean, we had a nice move in the last week, about 25% or so. Does it continue or does it run out of gas?
So we think that if you do see a correction higher in yields, it's going to be led by the long end of the curve. The front end is going to remain pinned near zero. If you look at what the Fed rhetoric has been saying, they are telling the markets quite clearly that they're going to be on hold now and for the foreseeable future. The market's price for that, where we think that you can see higher rates, is in the long end of the curve, but we don't expect to see a material sell-off here. That's not our base case.